Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Is it time to sell your silver? Should you throw in the towel, capitalize on some profits and sell it while the prices are high? Or is it time to buy silver? This is how crazy the markets are, where prices are extremely high, where a lot of people could sell and make a pretty penny, but there's so much more room to grow and so much more opportunity. It still is a good time to buy as well. So with that double standard, it's definitely going to be a little confusing for especially the beginner stacker, trying to figure out whether you should be buying or selling. So before we jump into this, I do want to mention I just hit 30,000 subscribers and I'm doing a 30,000 subscriber giveaway. I posted the video earlier today if you want to check that out and enter. It's also sponsored by the Silver Forum, so not only am I throwing in silver from my stack, they also sent me silver to give to you, and there's also another separate giveaway in the link of the description. So you definitely want to check that video out if you love free silver. So with that said, let's jump into it. So summary is silver is different than gold. Silver is cheap relative to gold, and silver has even stronger momentum than gold. So this is definitely true. Silver is more volatile, hits higher highs, it's cheap, it's more affordable than its big brother. See, it's similar but different than gold. I recently wrote an article that recommended investing into gold. Silver is the second most popular precious metal after gold, and many of the reasons for investing in one apply to another. In fact, their similarities raise the question of whether they are too similar and therefore redundant. In fact, as shown in the graph below, while their returns are certainly similar, they are different enough to warrant investing in them separately. The graph below depicts the R-squared between gold and silver, which is a measure of how much of the return of one is explained by the return of another. That's why R-squared is also known as the coefficient of determination. On average, gold's return explains about 62% of silver's return and vice versa. Recently, the R-squared has declined about 57%, so only a little over half of the return of silver is explained by the return of gold. They are different. And this isn't rocket science. We've talked about time and time again why silver is so much different than gold. They're used for different reasons. Precious metals aren't valuable because they're shiny. They have real uses. Gold's uses are more for coinage, more for bars, more for jewelry. Silver, on the other hand, is more of an industrial metal, so silver is used more for electronics, gadgets, stuff like that, even in the medical world. So silver is an industrial metal, also a monetary metal. Gold is just a monetary metal. So silver is going to be appreciating whether the economy is in good or bad shape. So it has an advantage above gold. There's more opportunity there, and it's more volatile. So it has more opportunity and more potential. When gold's rising, silver could rise even higher, and it usually does, and that's what we're seeing here. So diversifies the market risk. So the graph below shows the same R-squared statistic, but this time instead of gold, the relationship is with the S&P 500. Clearly, very little of the market's return explains the return of silver. This illustrates the fact that silver does a very good job of diversifying market risk, since the two are virtually unrelated. On average, the S&P 500 explains only about 5% of the silver's return. So only 5%. We've talked about stock market volatility, and this is a good video. This is a really good video because I always talk about what really influences precious metals prices, right? What influences gold's price? What influences silver's price? And is price manipulation, is the conspiracy theory of the silver bubble, is all this intertwined, and what percentage or what factor plays into the price, into the price's average? I mean, look at spoofing. JP Morgan, Merrill Lynch, the Dutch bank, all got caught spoofing, placing false buy orders on these exchanges, canceling the order before they go through. And when this was all happening, they were doing it with millions and millions and millions of dollars. And I wonder where the price would be, where silver's natural price would be, if people weren't trying to pull the strings and manipulate it, behind the door, behind closed doors. So it's interesting to see whether it's supply and demand, whether it's how well the economy is doing, whether it's the dollar index higher or lower, whether it's stock market volatility, whether it's supply and demand, everything is affecting precious metals prices to some degree. I'm just curious on to what degree or which factors pull the strongest. I definitely think supply and demand does, but speculation is definitely is intertwining more in these markets nowadays. I hate to say it because silver and gold have intrinsic value, but it's true. So silver also does an excellent job of diversifying the US dollar. Both precious metals and the dollar are safe haven stores of value, and to some extent compete for that role with investors. Like gold, silver can provide protection for those periods when the dollar declines in value, as it has this year. With the blowout fiscal deficits and unprecedented monetary expansion since the pandemic, many analysts expect further weakness in the dollar in months and years ahead. And Donald Trump said the dollar is too strong. He wants a weaker dollar, right? It's going to only push precious metals higher. So the graph below depicts the correlation between the US dollar index, a measure of the value of the US dollar relative to a basket of major currencies traded as futures contracts on the ICE exchange, and silver. So you can see that right here. So US dollar in a 36-month correlation. Inflation hedge over the long term. Precious metals like gold and silver have not had a tight relationship to inflation. And it's interesting because when inflation is high, usually this pushes precious metals higher. The more money we pump into the system, the weaker the dollar is, the more saturated the dollar is, and this in return pushes precious metals higher. If the dollar starts to strengthen, people gain faith in the dollar, it usually pushes precious metals lower, because when you think about it, people are transferring their fiat currency into precious metals and vice versa, taking their precious metals and liquefying it into fiat currency. So long-term value. Because silver has rallied so strongly in the past few months, it is reasonable to be concerned about whether it has become overvalued. However, as shown in the graph below, silver is still quite a bit below its recent peak in 2011, which was $50. Using inflation-adjusted prices, it is also dramatically lower than its all-time high in 1980. So what happened in 1980 and 2011, which led to $50 silver, the same exact things are happening in today's terms. Back in 2008 was a credit crisis, a financial crisis. 3 years later, silver hit $50. Today's terms, credit crisis, financial crisis, recession/depression, but also a global pandemic, which is only going to make things worse, more extreme, so expect higher prices. So the price of silver is often benchmarked against the price of gold, the gold to silver ratio, and this is something that we need to take close note of, because a lot of people wonder whether gold's the better investment or whether silver's the better investment and which to buy at that certain time. And I definitely can tell you this: right now the ratio is low 70s. A couple months ago, it was 125 to 1. Now it's around 70 to 1, which means silver has came a long way, outperforming gold. So you could use the gold to silver ratio to see whether gold's the better buy or whether silver's the better buy at that period of time. Silver is still outperforming gold for many reasons, mainly from silver's volatility and the attraction and the small market. Since silver is such a small market, when money comes in, especially new investors, it definitely inflates the price much faster than gold does. So return momentum, people are talking about, what's going to be happening from the S&P 500, the recovery, and this is what I see. So regardless of this pandemic, I knew that 2020 was going to be a huge year for precious metals because of the 2020 presidential election. Every 4 years when the presidential election happens, there's a lot of controversy, a lot of chaos, and that's what puts the gasoline on precious metals prices. So especially this year with how crazy things are, it's going to cause a lot of uncertainty in the economy, and that's what really pushes precious metals higher. If you throw a global pandemic on our hands as well, the sky is the limit. So this could be the cherry on top, the icing on the cake, the perfect storm, the stars that have aligned, and it's only looking up from here. So yes, silver prices are high. You could sell right now, but you might sell yourself short. I still think there's a lot of room to run. especially in the longer term. The short term, it could stay around here, maybe mid 30s, maybe go to 40s, but the longer term, I'm talking the 3 to 5 year range, that's when we're seeing some prices that we've never seen before. I don't want to be a silver pumper. I'm bringing a realistic perspective, my opinion. So I hope you enjoyed this video. I would love to hear where you think silver's price is going to be in the next 3 to 5 years and what's going to take it there. If you did enjoy this video, make sure to smash the like button. Make sure you subscribe. I post daily videos, usually 2 to 3 videos per day. If you want a chance to win some free silver, go check out my video I posted earlier today as well. You don't want to miss that. This was Silver Slayer. Thanks for tuning in. I'll see you guys soon. Peace.